I am showing stock market bounce back. Is America entering a new financial era? The crash was brutal. Tech giants collapsed. Retirements were delayed. Investors panicked. But now, the market is bouncing back. In 2025, the S&P 500 hit all-time highs again. Nasdaq surged 20% in Q1 alone. But here's the million-dollar question. Is this the beginning of a new American bull run? Or just a sugar high before the next collapse? Stay tuned, because this isn't just about charts. This is about your money, your future, and your place in the next financial era. Between 2022 and 2024, the U.S. economy was on edge. The Fed raised interest rates 11 times. Inflation spiked to levels not seen since the 1980s. Mortgage rates soared above 7%. Investors pulled $326 billion from U.S. equities in 2023 alone. People lost faith in the system. But in early 2025, something changed. Let's go back to 2008. The Great Recession wiped out 50% of the S&P 500's value. But by 2009, a quiet bull run began. From 2009 to 2020, markets soared over 400%. History tells us one thing. Markets crash fast, but they bounce back even faster when no one expects it. /N/ 2025, we see the same pattern forming. Inflation is easing. Unemployment is low. GDP growth returned to 2.1%. This isn't hype. It's momentum. This bounce back isn't just Wall Street hype. It's affecting real people. Retirement accounts are finally recovering. Real estate markets are stabilizing. Hiring is rising in tech and finance. Meet James, a 42-year-old teacher from Ohio. He lost 30% of his 401k in 2022. But in mid-2025, he's regained 80% simply by staying invested. It's a quiet rebound, but for millions, it's real. So where is this heading? Analysts at BlackRock and Goldman Sachs believe we're entering a new 5-year growth cycle driven by 3 megatrends: artificial intelligence automation, green energy infrastructure spending, semiconductors, digital security. Sectors like AI and renewable tech projected to grow 8 to 12% per year through 2030. But risks remain, including political instability, global conflict, and the upcoming U.S. elections. This isn't guaranteed growth, but it's opportunity if you're positioned right. So, how do smart investors prepare for this new cycle? /N/, and let's break it down. /N/N1. Diversify intelligently, don't bet the farm on one sector. Mix tech, energy, consumer, and dividend stocks. /N/N2. Dollar cost averaging. Invest monthly, not emotionally. This helps reduce risk in volatile markets. /N/N3. Rebalance your portfolio. Don't just buy and hold forever. Review allocations every 6 months. /N/N4. Don't time the market. Time in the market wins. Even in past downturns, staying invested beats waiting on the sidelines. /N/N5. Boost your emergency fund. A strong cash reserve lets you survive dips without panic selling. The stock market is bouncing back. The only question is, will you bounce with it? If you found this breakdown helpful, you're already ahead of 90% of retail investors. We don't do hype here. We do facts, strategy, and smart moves. If you want weekly insights into what's next in the financial world, hit subscribe and join thousands of others taking control of their money, their mindset, and their future. See you in the next episode. Until then, invest wisely and stay informed. To understand the bigger picture, we asked market experts, what does this rebound mean for everyday investors? We're seeing strong retail inflows again. That's a key sign that confidence is returning, but investors must remain cautious. It's not about chasing highs, it's about long-term resilience. Bonus tips for 2025 plus investing. Explore tax-advantaged accounts. IRAs, Roth IRAs, and HSAs offer growth without the tax bite. Watch global indicators. Oil prices, China's economy, and BRICS nations' moves all influence U.S. markets. Don't ignore dividends. Dividend-paying stocks are a reliable income stream, especially in uncertain times. Automate smartly. Use robo-advisors or automatic transfers to remove emotion from investing.